The ledger. This segment's learning objectives are to describe a ledger account and a ledger and understand how balance sheet accounts are increased or decreased. A ledger account is a device for recording the increases or decreases in one financial statement item, such as an asset, a type of liability, or owner's equity. The general ledger is an accounting record that includes all the ledger accounts. That is, a separate account for each item included in the company's financial statements. Increases in assets are recorded by debits and decreases are recorded by credits. Increases in liabilities and in owner's equity are recorded by credits and decreases are recorded by debits. Notice that the debit and credit rules are related to an account's location in the balance sheet. If the account appears on the left side of the balance sheet, asset accounts, increases in the account balance are recorded by left side entries, or debits. If the account appears on the right side of the balance sheet, liability and owner's equity accounts, increases are recorded by right side entries, or credits. An accounting system includes a separate record for each item that appears in the financial statements. For example, a separate record is kept for the asset cash, showing all increases and decreases in cash resulting from the many transactions in which cash is received or paid. A similar record is kept for every other asset, for every liability, for owner's equity, and for every revenue and expense account appearing in the income statement. The record used to keep track of the increases and decreases in financial statement items is termed a ledger account, or simply an account. The entire group of accounts is kept together in an accounting record called a ledger. An account is a means of accumulating in one place all the information about changes in specific financial statement items, such as an asset or liability. For example, the cash account provides a company's current cash balance, a record of its cash receipts, and a record of its cash disbursements. In its simplest form, an account has only three elements: a title, a left side, which is called the debit side, and a right side, which is called the credit side. This form of an account, illustrated as follows and in the next section, is called a T account because of its resemblance to the letter T. In a computerized system, of course, the elements of each account are stored and formatted electronically. More complete forms of accounts will be illustrated later. Whether an account is increased or decreased by a debit or credit entry will depend on the account type, i.e., asset, liability, etc. We will learn more about this throughout the session. Here are the dates and amounts of transactions that impacted the cash account of Overnight Auto Service for the month of January. Because cash is an asset, all receipts or increases should be placed on the debit or left side of the ledger account. If increases are placed on the left side of the account, all payments or decreases should be placed on the right or credit side of the account, according to the basic accounting rules for assets. The balance in any account is the difference between total debits and credits. The balance is placed on the side with the greater dollar amount. The balance of an account is the difference between the debit and credit entries in the account. If the debit total exceeds the credit total, the account has a debit balance. If the credit total exceeds the debit total, the account has a credit balance. In our illustrated cash account, a line has been drawn across the account following the last cash transaction recorded in January. The total cash receipts or debits recorded in January amount to $82,800, and the total cash payments or credits amount to $66,200. By subtracting the credit total from the debit total, 82,800 subtract 66,200, we determine that the cash account has a debit balance of $16,600 on January 31st. This debit balance is entered in the debit side of the account just below the line. In effect, the line creates a fresh start in the account, with the month-end balance representing the net result of all the previous debit and credit entries. The cash account now shows the amount of cash owned by the business on January 31st. In a balance sheet prepared at this date, cash in the amount of $16,600 would be listed as an asset. All asset accounts normally have debit balances. It is hard to imagine an account for an asset such as land having a credit balance, as this would indicate that the business had disposed of more land than it had ever acquired. For some assets such as cash, it is possible to acquire a credit balance, but such balances are only temporary. The fact that assets are located on the left side of the balance sheet is a convenient means of remembering the rule that an increase in an asset is recorded on the left or debit side of the account, and an asset account normally has a debit or left-hand balance. Liability accounts and owner's equity accounts are increased by credits and decreased by debits. The relationship between entries in these accounts and their position on the balance sheet may be summed up as follows. Liabilities and owner's equity belong on the right side of the balance sheet. An increase in a liability or an owner's equity account is recorded on the right or credit side of the account. Liability and owner's equity accounts normally have credit or right-hand balances. Asset accounts normally have debit balances. Thus, increases are recorded by debits and decreases are recorded by credits. Liability and owner's equity accounts normally have credit balances. Thus, increases are recorded by credits and decreases are recorded by debits.